Good morning, Paul Georgie from Allendale. It's January 27th, 2012. It's Friday morning, and the U.S. just released their GDP numbers, a plus 0.28%. Trade was looking for 3% increase, so the reaction off of this is the dollar is increasing some. The stock market has sold off since this report, and crude oil is also sold off from about 80 higher to unchanged as we speak. Overnight, we did see a rebound in the corn market. It gave back or took back some of that sell-off that it had late yesterday. How will it react here this morning at 9:30? A lot of it's going to depend on where these outside markets are at that time, as we are definitely being influenced by outside trading right now, a risk-on type trading here in the last few days. Is it profit-taking day-to-day on Friday? That's what we're going to have to be watching for. We did get some sales announced from South Korea. They say that they're buying 110,000 tons of U.S. corn. They also were in and bought 110,000 tons of wheat, of feed wheat, and the Japanese bought 150,000 tons of wheat, only 50,000 from the U.S., however. So that should be a little bit supportive, or giving us a little strength and giving us some reason why we're seeing strength here in the basis levels in central Illinois along the Mississippi and Illinois River. The good thing there is that the river navigation is open, so because of the warmer weather that we've had, basis at the Gulf has increased, and keeping central Illinois basis, as up until this time we had no competition from exports in those areas, so the ethanol plants and feed use was the main focus. Now we threw in the demand for exports. That certainly has helped. Thing that we got to watch for, though, is already we're hearing some producers tell us that the basis in further out areas that are not along the river have already set back. They've got enough corn, and they were at 15 over. Now they're at 10 over. So seeing some adjustments there, some signs that maybe the end user is getting filled up with his needs. Producers have sold enough to meet those needs. Our concern is that once we get the end user filled up here, we could see a setback, again, until we see some major export business come into the U.S. Now, a concern that we've got with exports is that the delay in exports out of South America, Brazil because of the late planting, Argentina because of port issue there at Rosario, and because of the drought, we have seen the export demand stay or come to the U.S. And once that problem down south is relieved, where harvest gets underway, we could see our export business dry up again. So those are things that we've got to watch for at this point in time. We need to keep an eye on that, and it's very likely that we continue demand here coming out of the U.S. as we've seen some of these sales here this morning. We'll have to watch for any further announcement of sales by the USDA here at 8 o'clock today. We've also got money flow that's keeping this market going. We, as many described yesterday, as the Bernanke bounce in the grains, where we've seen the grain markets open sharply higher. The risk-on, risk-off type attitude of the macro markets definitely going to continue to influence us. We expect some two-sided trade here today, actually, as we go into Friday, maybe some position evening ahead of the weekend, where we've had an extremely volatile week. That would be not out of the question as far as we're concerned. In the cattle trade, we're still at a standstill in the cash market. Packers want to buy cattle at the low 20s, 120 to 122. Feedlots are offering at 126 to 128. We think if there was a strong bid at unchanged, which is at 125, 126 area, that there would be plenty of cattle moving. but packers have not shown their hand yet. The biggest problem that the packers have is their margins have been extremely in the red. Some calculations are well over $100 in the red right now at the packer level. And why? Because product just is not moving. We've got cutout values down yesterday about 40 cents in the choice. Select was up a little bit. So it appears that the problems that we're running into at the retail counter, we're not moving as much meat at higher prices, and maybe it's because of the beef prices and pork prices actually have increased here in the last few weeks. And it's also combined with the time of year where credit card bills are coming in. People are realizing that they did go on a spending spree here for the holidays. They've got credit card bills to pay, and that is taking some of that meat demand and extra demand that we normally would see in the that would able to support the meat prices. So look for continued volatility here as we go into the weekend. We've got very tight supplies of cattle right now, and if we see any kind of weather situation occur here in the next few weeks across the southern plains, we could see even more strength in this market. So a lot of things to watch here, a lot of reasons to stay in touch with Allendale's research. You can get us on the web through the Allendale Research Center. You can subscribe to that. We've got a lot more details for you. Or just give us a call, 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you on Monday morning. Thank you.